Good morning, welcome to this Phoenix Blue update on Monday the 12th of September. I'm Tom Colley and I'll talk to you about the markets and the news this morning. Well, we had an interesting week last week. We had some negative non-manufacturing data out of the States, which created a big bullish move on the US dollar. We then had the ECB meeting on Thursday, which did the opposite, followed through on Friday, and gave us a really strong US dollar. So a really mixed week from that respect. We also then had a big sell-off on the US equities, which wasn't matched by a big bullish move on safe havens. So a little bit of confusion there, some variety, and we'll be looking for that to settle down, play out going into this week. Now, before we look at the charts, let's just have a look at the news announcements. Well, the only news announcement today is FOMC member Brainard speaks at 6 p.m. She is a dove. That means she is in favour of only raising interest rates very gradually and cautiously. That puts her in the same camp as Fed Chairman Janet Yellen. The converse to that would be a hawk, who are looking to raise rates much more aggressively. So we show an interest in whether they are doves or hawks. That helps us interpret what they actually say, because obviously if a dove makes a hawkish type statement, that's much more significant than a hawk making a hawkish type statement. Just looking to the week ahead, a couple of big announcements, rate announcements for the Swiss National Bank and for the Bank of England on Thursday. Something for just a heads up on those. Okay, here is the dollar index. So the dollar last week. This is Tuesday. We saw this big sell-off. We had some very poor non-manufacturing data out of the States. That was the worst miss in terms of it coming in below the forecast for 5 years, and was the lowest actual number for 6 years. So we saw some very negative information there. Then on Thursday, we created this low test bar here through the ECB press conference. The market was anticipating that the ECB would at least announce something in terms of extending the period of easing. That didn't occur. So through the speech, we saw price come down, test this trend line through here, almost spot on, and then push back to end up giving us a bullish close. Friday, we saw a follow through on that. And saw a nice bullish day on the US dollar. But going into this week, we are more cautious than we have been of late. We actually want to see a break and close above 96.20 here to confirm dollar strength. If we get into this zone between 95.35 and 96.20, we will be looking at intraday trades on majors and minors, taking advantage of that dollar strength, but we won't be looking at any end of day trades until we get a close above that level. So as I said, a cautious sit back and wait start to the week, and we'll react as and when things play out. Over on the yen, the USDJPY, here we saw the yen last week test this really significant level here at 104. We've got a trend line stroke channel there, big round number, price came up, tested that, couldn't break out, and then on the Tuesday, as we saw the dollar weaken, we saw the yen strengthen. Bear in mind we strengthened the yen to the downside, and then towards the end of the week, although we've seen a bullish move through here, not as bullish as the dollar move. I say it's bullish as far as the chart's concerned, but that's weakness in the yen. Now, possibly the reason for this is we saw a big sell-off in equities on Friday, and the yen is a safe haven, and we possibly saw this move curtailed as some money came into the yen from equities in a risk-off environment. Now, we didn't see that on the dollar, we didn't see that on gold and the other precious metals. There was no risk on, risk off, so we are looking at that as well, and we'll look at the actual charts for that in a moment. Over on the euro, we actually took a number of trades after the ECB statement. We took an intraday trade at this level here, based on a false breakout, and we got some profits off the table, stops at break even. I was a bit over aggressive with my stop, so you can see we're actually stopped out here. But we got another entry on the break of this low here that we're in on at the moment. We're cautious this market. We've just mentioned the dollar and dollar strength. We won't be looking to add into this market at this moment in time until that dollar strength is confirmed. Okay, over on the S&P, well, this is a big move through here. We had been watching this level here and this consolidation through here. This is the longest consolidation period on record for the S&P. So at some point it had to break one way or the other, and I'm sure I mentioned last week that's what we were waiting for to happen. Well, it broke in a big way, and as it came through this level here, we took a short trade, an intraday trade. We then took half the money off as it reached this trend line through here, and let the remainder run. Well, it continued to run, superb move through there, and then even since the open overnight, we've seen price run still lower. As we speak, I'm looking at another chart, and we're retesting this level at 2116, and so we'll be looking to potentially add into that position if we get a price action opportunity in the next couple of hours there. But this could potentially be a very major move. You can see there's the entry, there's where the stop's pulled to at this moment in time. We are targeting around 2,000 in the longer term. It doesn't mean we're going to reach that, but there is possibility for that. We will be looking for confirmation here of whether we get a retest of one of these levels to take the price lower, or whether we get a break back up even up to the trend line or beyond. So at this moment in time, we are unconfirmed in that. We're in a trade, we've got nice profits locked in, and we will look for further opportunities to the downside on that. Over on gold, we also got in short on gold intraday at the same time as we were short on the euro. Nice trade here, but following that was on Thursday, and on Friday when we saw the big sell-off, we're now very cautious in this market because we've got a equities market selling off really strongly, and we would anticipate in normal circumstances that gold would be bullish as money ran out of the equities markets and into the safe haven, the number one safe haven being gold. So we're in this trade, we've got money off the table, we've got more money locked in. That's the stop, that's the entry. We are targeting this level down here, and as you can see at the time this slide was produced, we were testing this 1330 level, let's call it. So there is possibility for price to come back down to this level around the 1307, I think that is. We'll be out of the trade there, 13.7, 13.10, and we will actually potentially be looking for a stop and reverse trade there. That is, our trade will get stopped out, price will come to there, and we'll look for a price action opportunity to take it to the long side, anticipating that the risk-off scenario starts to play out. Now, if we have a look at gold on the weekly chart, this is how very significant this move is. There is potential for this to be a big move for equities. We can see on this weekly chart, look at this trend line here, perfect touches, and look at the number of touches we've had through there. What I've just said is we're looking for potentially the trade to come down to this lower level here before taking it long. If we break above this trend line, then that is hugely significant, because that is finally breaking the downward trend from the very top of the market. And I haven't got dates on here. I think that was 2011 up there, if I remember rightly. Not that it really matters, but you can see how significant that weekly trend line is. So if we get a break above there, we should have a real risk-on, risk-off. Sorry, a real risk-off scenario with potential further downside on the S&P. Okay, guys. If you're new to Phoenix Blue, And don't forget that you can come and trade with us for 4 hours free of charge. You can trade alongside our 2 top fund managers. We also teach you a lot, or show you a lot, about the basics of how we trade here at Phoenix Blue, how we use commitment of traders analysis, etc., etc. If you're interested in that, pop onto this page, which is the events page on the Phoenix Blue website, phoenixblue.co.uk. Leave your details and we'll send you an invite for that event. There are other, if you want to, if you can't make that date, we do this on a monthly basis. So just go to the contacts page, leave a message, and we will give you details of the next event as soon as it comes available. Okay guys, that's it for today. So what we've said is we're going to be cautious. We're going to wait to see if the dollar strength plays out. We're going to wait to see what happens in the risk on, risk off scenario. But potentially going forward into the Christmas period, after a very, very restricted movements in August, we have the potential for some bigger moves at last. Okay, trade carefully and have a great day.